Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, I'm sorry I'm a little bit late. I had, for some reason, OBS wouldn't start up, but it's okay. Well, there's not a whole lot for us to talk about. We just got to wait for non-farms here. Non-farm payroll here. Coming in for the numbers. We got it in about a minute. The headline non-farm payroll number estimate 189,000 versus 223. My own research and so forth suggests that we may get another slightly softer than expected report. So it may actually kind of be like that Goldilocks scenario again. I don't know if that's going to result in any good trade opportunities for us. It actually kind of suggests that we might not have as much opportunity as we'd like. But there's also PMIs later today, and these ISM services PMIs, those are going to be really important. So we got plenty. We'll have plenty of chances here today for the markets to move. Make sure I got my news squad going. Well, it says I'm connected. Good morning, mission. Oh yeah, all of the liquidity is gone. Whoosh! Whoa! What the fuck? What the fuck? 443? That's bullshit. There is no fucking way. Are you fucking... What the hell? I am so sorry for the profanity, but I am so shocked. That number is... There's no fucking way that they added 443,000 payrolls and the estimate was 190. Are you fucking kidding me? What? Holy shit. Whoa. I gotta... What? Man, my gosh. Are you kidding me? This is the crazy... Well, I'm not going to touch that. I am not touching that one. No way. This has got to be a joke. Wow. Well, the treasury's just cratered. Wow. I mean, if that number is for real, then, you know, I look out below for 4,000 again, right? Like, what? So the only time I've ever seen anything remotely close to this is when, right after the pandemic, and remember we were expecting a loss of like 1 million jobs or whatever, and it was a gain of 1 million jobs. Nothing will ever beat that. But wow. Double the expectation? You kidding me? There's got to be like some sort of really wild seasonal adjustment involved or something, because that number is not... There is no way. Trading Floor Audio has posted a GIF of SpongeBob running around in panic and saying, "This is the Federal Reserve Open Market Committee now after non-farms payroll." Yeah, Jeez. So thing is, that is such an insane number that you could get a move all day for sure. So I'm not gonna touch it for like at least 5 minutes, but so crazy. Look at the flow. They're actually back to Nick Timmerose re-upping for no oh my gosh, Nick. Oh man, reposting this for no particular reason. Fed officials face a fork in the road when forecasting inflation. Focus on moderating wage and price trends or persistently low unemployment and steady hiring. Could a number like that drive inflation? Yeah, absolutely good. Absolutely. So like the treasury is still just like they haven't eclipsed the lows from before the Federal Reserve meeting. So what a time. Yeah. I think I might have already missed the best opportunity for Phil. It looks like the treasuries might be going for new lows again. So the kind of like the spike from before the non-farms, or sorry, the Federal Reserve earlier this week was 114.18. So which is a nice little hop below us. Might be an interesting benchmark to watch if we go for new lows. The unemployment rate fell to 3.4%. Could do that. So one thing, so number one thing is that the I don't want to say like the biggest risk in terms of, it's not like the most likely risk, but it's the risk that would be like, would screw this trade up the most, would be that information comes out suggesting that the number is actually not as strong as it appears. But there's some sort of seasonal adjustment and that number is just complete bullshit, right? You can kind of see we are in like the liquidity hole, and even though the sellers are pushing very, very hard, you're getting some like profit taking and so forth. So it is kind of just kind of going back and forth in this range down in here. So we may have to be patient. We may have to take a little bit of heat if we're to go short here in the treasuries. Provides good opportunity for us to play on some though. I can see over here in the micros though, like it's all buy. You can just see them taking out 5-10 at a time here and there. Okay, large bid at 26.5. Somebody takes it. Another strong bid at 25.5. Curious. Yeah, well, so what I'm seeing right now is there's just such a massive liquidity vacuum above us that I think there's a really good chance that there's further waves of selling, but you know, we need to wait a little bit for the book to rebalance. Enough volume went at 28.5 and 29 that here on my market making, I probably could have worked that out a little bit better. Yeah, the prices, like the prices that we close at today are going to be anybody's guess, but super interesting, right? Okay, that was good. Like that. Oh, you know what? I think I have more contracts on than I realize. Yeah. That's good. I was looking at it and I was like, why do I only have one? And then I realized, oh, right, because I'm looking at my micro position, not my sim treasury position. Okay, so the 30-year is dropping to new lows. Kind of curious. I mean, like overall, it's a flattener, but at the moment, the 10 is and the 5 pulled back a lot more than the 30 did. The 30 is leading the way down at the moment, which is how we're able to be up, even though it's quite pulled back here in the 10-year. Okay, that's looking good for us. Mohammed A. El Arian, a stunning U.S. jobs report highlighting the strength of the labor market and its complexities. Jobs rose by 517,000 for January compared to the census forecast of 189,000. The unemployment rate fell to a 53-year low of 3.4%. The puzzle, wage growth came in as expected at spot 3%. Your TLT, oh yeah. Dude, treasuries are gonna get obliterated. This is, I tell you what. So it's sort of funny. I came in and I said, well, my research suggests that we're likely to get another slightly soft report, right? So that was dead wrong. That was dead wrong. But the the interesting thing isn't that I'm dead wrong. The interesting thing is that like how this changes like all of the scenarios that we have going into the for the rest of the month going forward. Because when it was like, okay, nothing awful happened in the Federal Reserve and the jobs report, if it was mild, then what is going to happen for the rest of February? Well, maybe you have a gentle move up, except for that we already moved up a lot, so it kind of doesn't really provide a whole lot of interesting trading opportunities. But now that you have this, oh wow, this jobs report was like way higher than we expected, and how can it be so high? Craziness, right? Now this scenario that we were thinking about in the beginning is it's not just on the table. It's like, well, okay, so then the other thing was we were saying, well, the Federal Reserve comes in, or my scenario was, not we were saying, was just Seth. You guys were probably all correct on everything the whole way and knew what was going to happen. Okay. What Seth was saying, Federal Reserve could come in hawkish and that could hurt the market, and we'd see the market take a big beating here and treasuries take a big beating, and then we would want to pick up the treasuries after the fact, right? Well, with that print on the jobs report, well, first of all, the scenario didn't happen. But even if it did happen, if the Federal Reserve had come out and been hawkish, right, then that scenario still would not have happened, right? Because this non-farms comes out, and what does this non-farms say? This non-farm says, yeah, they're probably going to raise interest rates in March. They might do they might go back to 50 basis points. Yeah, they're probably going to do one in May. They're probably, they might do them after that. So, I mean, if we continue to get jobs reports like this, they're going to just have to keep raising interest rates, man. So it shifts everything from hey, we might get a good value buying opportunity here to just sell everything, man. I don't see any reason. I actually, maybe I should think about pairing some stocks, man. I don't like to mess with my portfolio in that way. I really what I need is I need more portfolios. I need like 2 stock portfolios, one that is kind of more buy and hold and one that is more actively managed, because I feel like on the active management perspective that it makes sense to just dump all my stocks, right? On rates, I think that we've got to at least see 3.5, right? So remember that we started this day down at like 3.3 something, so we've already had almost 20 basis point increase. Yeah, let's say 3.38, so 4.8 would be 10 basis points. We already had 10 basis points of rising interest rates, and they may only be halfway started. On this one up here, on this sim trade, because this is like supposed to be like my swing trade, sort of not my swing trade, more like how would I manage a CTA, right? So I think that we hold this, we take the second contract off at the options close and try and hold it through next week. That's what I think we do on that one. I mean, am I being overly dramatic? But oh man, that's that killer. Oh man, NASDAQ killer. You weren't there for the release? Dude, we just had the most insane economic number ever. That was the most insane thing ever. I don't have words to describe what just happened. It was, I can't believe. So like the thing was, again, there was one report that was a little bit more insane in terms of like the amount of miss or whatever. And that was when we were expecting to lose 1 million jobs and we actually gained 1 million jobs, right? Now on that one, it's understandable because that happened like just after the pandemic. And so we knew that our ability to predict things was not very good and that all of the data would be wild and all that sort of stuff, right? But on this number, you know, I remember saying back in December that like the next 2 jobs reports will be really important and that the market will be really focused on jobs, right? But coming into this number, I was kind of starting to think that, you know, it wasn't going to be such a big report, that the opportunity for something crazy to happen was really low, you know, that the market was doing so well that even if it was a little bit high that they could manage it. But it was double the expectation is just nuts. So yeah, Octavius, I call shenanigans. So again, I don't know what the probability is here, but on this trade, if we're taking it as a swing trade, the biggest risk is absolutely that there's, you know, like seasonal adjustments and all of that sort of stuff, that it wasn't actually a very good number, right? How can you have all of the tech companies doing big percentage layoffs, the financial companies doing big layoffs, and jobs created still up 400,000? Okay, so what was the actual number? The actual number was for the US non-farm payroll, 517,000 jobs added versus an expected 189. So it was almost double the expectation. So nuts. I wish I had recorded my well, I mean, it's here on the stream, so I can like go and re-download it, but I wish that I had I wish that I had been like side recording it. Oh, well, Forex Factory is probably bugging out because everybody's going over there to try and figure out what's going on. Yeah. Well, Forex Factory, like using Forex Factory to load the numbers isn't very reliable when you get a really bad number. Or a really big number. That's why you gotta have New Squawk. Don't believe your eyes, believe what we tell you. I don't know if that explanation really makes sense though, Octavius. I mean, so when we come in here, there's something going on, right? How are the analyst estimates so far off, right? That's a question that has to be answered going forward, okay? But one theory would be that the Department of Labor is cooking the numbers for the Biden administration, right? I don't think that explanation makes sense. If I was the Biden administration and the Bureau of Labor Statistics right now, I would not want the non-farm payrolls to be double what the consensus expectation would be, right? Because number one, that's not going to be good for the economy and the administration. This is kind of suggesting that we're going to go through a whole nother round of tightening and fighting inflation and all of that, right? But number two, if you're going to cook the numbers, you don't want to make it so obvious, right? So I don't think that the cooking the books necessarily makes sense as an explanation. But there could be seasonal adjustment involved. There could be a seasonal adjustment involved in it, right? So again, so I've definitely seen news. Of course, like I said, this is like only the second time that something like this has ever even happened ever. Okay. But just looking at like somewhat comparable events, which was like when a number will like really big missed expectations. I have seen many times where there's like a really strong pushback against it because people say, yeah, well, you know, here's something about it and something to question the number. And I often think when that stuff happens, that is like that somebody is doing market manipulation, that they had a position that was bad and they're trying to get people to buy it up so they can get out or whatever the deal is, right? But then, like I said, the one where the really big non-farms missed post-COVID, or beat rather, COVID, you know, that one, it just kept going. In fact, the one thing that was interesting about that one, and I think is very relevant to this particular situation, was that there was like this huge move off of the initial move, and then the equity markets just went flat until the open. And then on the open, they sold it like 2 times as far as that. So like you could have just gone short the equities at the open and you still would have made out with tons. You still would have made a ton, you know? So, okay. Now, looking at my position here, it looks like they did briefly tag 3.5, and then you saw some profit taking after that, right? The flows are quite crazy. Oh man. So like the initial backwash after the news was a lot, right? But then after that, from 90K now down to 50K. So we're already 40,000 contracts net short today. This is pulled back almost 20 ticks, right? So one might think, oh, well, I could take profits here, get back in here. The problem with that is the chances of you missing a bit of it is actually too high. So I think for me, I probably need to just relax and try and let it run. Okay, let us read what Zero Hedge has to say about this report to see if there's any more interesting stuff in here. Ahead of today's payroll report, we warned that there's a possibility for a lot more market whiplash because, as Goldman explicitly warned, there's a risk for an outlier strong report in January due to massive seasonal adjustments. Okay, I do remember them saying that there would be massive seasonal adjustments, but when they said that, there was no way in my mind that I thought that it would be like double what the expected report was. Okay, which, when coupled with historical revisions to both the household and establishment surveys, could lead to a massive beat. That's precisely what happened when moments ago the BLS reported that instead of 188K expected in January, the US created a laughably goal-seeked 517 jobs, up twice from last month's upward revised 260 and the highest since July 2021. Yeah, having it at like 517, that's like what really makes it, because it's like so big compared to everything else. For those keeping track, this was a record 8th consecutive beat relative to expectations. Ooh. I think someone made an 80 million options play the other day. He has crushed. Oh. Double meaning more unemployed. No. Double meaning more jobs created than expected. So the macroeconomic consequence from this is that employment is still very hot, and that means that the Federal Reserve is probably going to need to be more forceful. right? So what I'm trying to sort out here is how big of a deal was the seasonal adjustment? And while we joked yesterday that the ongoing mass layoffs would prompt the BLS to cut the unemployment rate to a record low if for purely political purposes, the joke was on us. According to the BLS, the unemployment rate really did drop to a record low 3.4 from 3.6. Technically not a record, the lowest ever was 2.6 in 1953, but it will do. Among the major worker groups, the unemployment rates for adult men and adult women, teenagers, whites, blacks, Asians, and Hispanics showed little change in January, but it is worth noting that the unemployment rate for blacks dropped to a record low. Developing. And then they have a story about how the market is reacting to that. Good news on the labor market is a disaster for the soft landing narrative and sent rate hike expectations soaring above pre-Powell levels. This sent stocks tumbling and bond yields are soaring back to pre-Powell levels. Gold tumbled back to 1900. The only thing flying high is the dollar. Yeah, got look at that. They are up over $1 now at 102.32. Jeffrey Rosenberg, a senior portfolio manager at BlackRock Incorporated, says on Bloomberg TV, this is a reminder of what Powell tried to say, but the market wasn't listening. I agree somewhat. I think that Jerome Powell is probably shocked that the number was 517 as well. But I do feel that the market was really more like overreacting to what he said. They were looking for him to say a specific thing really hawkish, and when he didn't, all of the shorts gave up. That's what really happened. And then they all gave up on their shorts, and then the perfect opportunity to come in and short the equities comes back in. I tell you what, anybody in the treasuries that held on to their shorts, or after Powell added shorts or entered into a short positions, good on you. You're the winner today. Wow. Oh yeah, I mean, if you had gone short after Powell, like if you had gone short on Thursday, well, but like here's the thing. There was tons of wild volume yesterday, so it's entirely possible that some big players did in fact go short like that, right? But you're right. How do you predict a number like that? You just can't. Is there anybody out there that can say they knew that the number was going to be as high as 500,000 and they were short going into the news because of that? If that person exists, I'd love to see it, but I'm gonna bet that anybody that was short was just lucky. Yeah. This is just nuts. The most insane jobs beat ever. Gonna put my title as the most insane jobs beat ever, rates tighten. There's always someone. Oh yeah, could be. I tell you what, Jigsaw Trading sure has been writing a lot of blog posts lately. Okay, so here on this one, I'm gonna add a little bit. Come on. I think I need to clear things. Looks like I'm gonna have a hard time getting filled there at that price. NASDAQ futures down 2%. Dude, silver is down 3%. I think like my stock portfolio positioning here is okay in that I think that I can outperform the market, but it's going to take a real beating today. And even if you just, you know, dump your whole portfolio at the open, it's still going to be painful. So this is a situation if my portfolio, or sorry, if my trading account here was a little bit bigger and I was feeling more confident, like let's say that I had made the $70 on Wednesday instead of screwing up royally, I'm actually feeling pretty okay in this area about adding another contract, but I won't do that for my live one. I think that the volatility is too high for the level that my portfolio is at right now. So my account. I shouldn't call it a portfolio because I don't hold a whole lot of stuff in it, right? But my account. Okay, so I got filled on that one contract. That's good. Give me my money, B. you know, you get these pullbacks. So like the thing was we had the push down, kind of came back. There was the initial pullback, and then there was kind of like a smaller pullback after that, and then it dipped down, and now we're getting the pullback, and it looks like from that further extension down they retraced that further extension. So and it has been it hasn't even been 30 minutes. Yours is up 0.4, and how the hell is that? Wow. Bravo, sir. What do you have? Oh wait, you do have AT&T, right? AT&T one might help, because you probably have some decent defensives in there. Yeah. Yep. Good job. Oh yeah, I only took from like here to here with 3 contracts, but that looked pretty good. That helped it. I mean, they're gonna have to really push to come and get my stops, but I've often sat and wondered, you know, when we get a really big move, why is it that I'll get out early and it'll go like twice as far as I expect. And then when I stay in it, it seems like it completely retraces. But I'm just sitting here right now, and it's like I want to do things. I don't want to just sit back and just watch it go all day. So I'm realizing that maybe I am less patient about profits than I realize. Oh, yeah. I say no rate cuts this year now, for sure. I mean, I think that the soft landing that was starting to look really was starting to look really good. I've never seen the market get flipped on its head so quickly, man. Because we just went from, oh, okay, everything's looking pretty good. Maybe we're gonna get new cycle highs or swing highs, and maybe that soft landing actually happens to, wow, what a complete and utter disaster. But I hesitate to try and predict what is going to happen in the second half of the year, right? Because the thing is I think there's more near-term risks. So like the thing is, how do you come out in March and still just do a 25 basis point increase? That a number like that could increase the odds of a 50 basis point increase, right? Like, oh man, let me put it this way: 3.5% in dimes is ridiculous right now, right? Like, there's a good chance that we're headed back to 4. Right? And if we're heading back to 4, you know, that's there could be a rate increase in March, there could be an increase in May, there could be one in June, and they could be double hikes, you know? I wouldn't want to be Powell. Now, like a key question is still going to be like, what does the CPI report come out as? But with unemployment going so well, you'll kind of have to be worried about later in the year CPIs rising again, right? Just consider, guys, the equity market hasn't even opened yet. We've only been 40 minutes since the news. It seems like it's been longer than that to me, but it's only been 40 minutes. It's going to be so hard to do actual work today. Oh man. It is going to be so hard. This is like the thing that keeps coming up in my mind is we should make a TikTok. It's not going to be very good quality because I'm going to have to like re-download it and it'll be all, you know, kind of like a low stream quality, whatever. But I definitely want to save my reaction. I've never reacted like that. Like I saw that number and I was like, I didn't even know how to react, and profanity just started coming out. Like NASDAQ Killer sounds very happy today. You know what, NASDAQ Killer, you didn't even tell us what you it sounded like you took a trade, but did you catch good and just end? Wait, actually, do you not know what the number was yet? Because I'm excited. If you don't know, I'm excited. If you don't know what the number is yet, I'm so excited to tell him. Maybe you should just say I don't know what happened yet, so you know, even if you did, so that I can have the joy of telling him. Oh man. Yeah, exit at the bottom. I just tuned in. Okay. Oh man, dude. Brace, like seriously, make sure you're sitting down. Brace yourself. I know that it sounds like I'm like super hyping this up, but this is like, I'm not even kidding, the craziest beat ever. Okay, ever. It's not the biggest in like in terms of magnitude, but like the only time that we had one that was bigger than this that I can remember was like right after COVID. Okay, so just to review, okay, the expectation was 188,000 jobs added, and almost he said that they have like 600, almost 517 versus the expectation of 188. Dude, Can you believe that? So Goldman was warning that there could be a large seasonal adjustment in this one and everything, but to get it to that number is like, what? Nuts. It's nuts, guys. So again, coming into today, we're kind of like sitting here thinking maybe they actually pull the soft landing off. Maybe things aren't so bad. The stock market is looking pretty good here. All of the technical, did I not warn you about that? It was like, listen, all of the technical guys are going to say the bear market is over today on Thursday, and they were doing it on Thursday. Oh, bear market is over, and I'm just like, well, just remember those things aren't very predictive. Okay. Now it's like we're going right back to the lows. Now it's like a real, complete, total collapse, recession. Certainly must happen now. Right? And unless you think that it was like, the thing is it wasn't just the seasonal adjustments. Like, the jobs added really was strong. And so in the establishment survey, the household survey rather, the unemployment rate went down, right? Unemployment rate went from 3.6 to 3.4. So 2 percentage points down. It's a pretty big one for that number. Now, surprisingly, average earnings was in line with expectations, 7.3. So everybody's working, everybody's getting jobs, but none of them are getting paid what they should. How is that? How is that? Yeah, OZB tags the evens, thank you. Look, so come over here, look at my chart. You got some good pullbacks over here in the 10-year and the 5-year, but in the 30-year, it just looks like a clean, even sell all the way. Ooh. Look at oil. I'm surprised that oil is not like down $5. Right now they're being pretty resilient, but I think that we're just kind of like in the trough. Maybe after the open, the S&P 500 will go for more. I guess I'm still nervous, to be honest with you. I'm still nervous because every time that I get in a trade like this, it comes back on me. I can think of so many times where it comes back on me. I really don't think it should. I really think that interest rates should be well above 3.5 by the end of the day, but I've just been traumatized in the past, that's all. Real field temperatures could dip to near 70 below zero at the top of Mount Washington in New Hampshire. The Weather Observatory may experience staggering Where are you getting that from? It's going to be cold over there, huh? It's almost a Category 5 hurricane over here, really. Hadn't heard anything about the weather in Europe. There's one of the funny things that's been going on TikTok is that Europeans are bragging about how well built their houses are. And everybody over in the United States is like, dude, if you had the kind of weather that we had over here, you would not build your house like that because you wouldn't want to be buried under it, right? This is a different when you're having tornadoes. You can't build a 1-foot concrete wall in your house when you have or earthquakes. No, he's talking about SR. Oh, wait. Oh. Forget I said anything. Oh, there's low. Man, they sure came back down to the lows there awfully quickly, didn't they? You blink and they're over there. Sethy wethy wethy. That you just remind me. You know what you're doing. So you guys have gotten to the point where like you've started to map out the pathways in my brain, and you know that if you say certain things in a certain way, it's going to trigger those pathways in my brain, and I'm just going to go down that path. That's what ADHD is all about. It's a really interesting thing. This is really actually useful. Okay, but what happens is in an ADHD brain, you don't have the dopamine in there, right? And dopamine is what sits in the cleft between different nerve cells. So if you don't have enough dopamine in there, what it means is that the signal doesn't propagate as easily, right? And what happens when a signal propagates and the dopamine is released is it strengthens that pathway, right? So what happens essentially is that ADHD people have difficulty building the pathways as strong as other people do, especially the ones in charge of like kind of orchestrating everything and deciding what is it that I want to focus on, what do I want to think about, etc., right? So a person with ADHD, if they get into something that they like and they do get the dopamine release and that pathway gets strong, right? Now you're more likely to go down that pathway again, right? So what happens to the ADHD person is like that's the only thing that does it for you. And so you just get this pathway just becomes so strong that it just dominates. And then that's like all you can talk about, right? So what has happened is I've talked about these things in the past and that pathway is really strong. And so it goes there. So when he says Sethy Wethy, the immediate thing that I think about was my second son's name is Ethan, and Ethan just sounds stupid. So we came up with different pet names for him, like Ethanos or Ethan-tastic. That's what I call him, is Ethan-tastic. Seeing the Japanese yen going for a new low here might have been why treasuries fell down so quickly. Excuse me. Like, I'm just staring at the E-mini right now, and I'm thinking, well, okay, we started at 4175. We're still above 4100. So I'm really concerned that there could be some real carnage on the equity open. What the hell? There's this guy, he's like, oh, what number? Man. Well, we got 10 minutes. 10 minutes to the equities open. This could be real carnage, man. So here's another thought. Here's another question for you guys. Should we hold this over the weekend? Should we swing it? Let's do a poll. So yes would be we keep it open over the weekend and we try and hold it either until the end of the contract or 4%. No would be we close it either at the pit or the NYSE close. Akshay says yes. Ismael, how are you doing? Man, you missed the greatest, one of the greatest moments ever in trading. Hey guys, you can't miss non-farms payrolls. You can't miss non-farms payrolls. Oh my gosh. Okay, so I have another question. The yes wasn't about the direction, it was about taking a swing position over the weekend, just to be clear. Oh, okay. You want me to take a swing over the weekend and then be wrong or something? Well, poll is up. So yes is we try and hold it if not to the end of the month. Hey, have a good day, Nasdaq Killer. Thanks for stopping by. So here's another thought. So interest rates right now are 3.5%, right? The highest I remember them getting was like 4.25, 4.5, right? Wait, let me go back here. Let me open up a new. Oh no, I have one over here. I have a daily 10-year. Okay, the highest they got was 4.4. Okay, so if we got new cycle lows in the treasuries, highs in interest rates, then we're talking 4.4%, right? And the whole thing is that the expected high in terms of like the federal funds rate and where the Federal Reserve is going to take interest rates is above 5%. Okay. Now one must consider now at this point that the highs may be well above 5%. Right? So I don't know how you calculate this sort of a thing. Obviously it's a very speculative thing, but like, can we justify even a 4%? Like, is 4% too low? Is a 5% in the 10-year too low? Like, that's possible. It's possible. I do kind of wonder if we don't fall into like full recession, complete collapse well before we get there. But these are the scenarios that I'm drawing out in my head now that I couldn't even fathom a week ago. Couldn't even fathom, you know, an hour ago. The delta from the last day of January is almost all gone rough. Oh yeah, you're totally right. What is the delta that we're at right now? We're negative 40s. So now, so since last time I looked at it, another 10,000 contracts short. So we're now short 50,000 contracts net on the day. But this is a day where we could be short a net 100,000 contracts, if not more. That's when you get a big number like a non-farm swap like this, that's what you tend to get into the hundreds of thousands. We will backfill the low volume dump from this morning before a new long-term trend will start. I'll have to see what happens on the open here. So like the thing is again, like whenever you get a big move overnight, there's always all these guys in the equities looking for a gap fill, right? I don't think I would be the one buying the equities on the open looking for a gap fill, but it's a possibility still. It's a possibility still. We should be worried about the PMI. So the thing is, we already had the manufacturing PMIs, right? So today we get the services PMIs. So just note that the whole thing has been that there's kind of been a divergence between the manufacturing and services PMI. And in services, we get prices paid and employment and so forth. So if those numbers are high, which, you know, they have been higher in services, that could really smack the market down too. That it happens at the top of the hour. Excuse me. But we should have the ES running here in a few moments. So, you know, I'm going to see if I can try and get NinjaTrader to come out of the right speaker. So it's, since it's not playing any sounds, it's not showing up here, but when it happens, I'll try and switch it. Is it worth it to get Dixie data, Joe Taro? I'm going to say no, because you can download my Speculator Seth Indicator Suite. You get a free 2-week trial, and then it's $100 for a full license. And that will give you the synthetic dollar index. So you can get it for $100 one time instead of having to pay like $50 every month. Maybe if I go away and come back to it. It needs to be on voice meter aux input. For some reason, it's just not showing up on the list. So I'm gonna have to go do it this way. Okay, so the initial move on the S&P 500 is actually a little lackluster. Did you guys hear the ding? It's suggesting to me that you should have heard the ding. Well, luck here as the S&P 500 opens, there's the treasuries pushing to new lows again. After all of that insanity, I haven't actually seen that much on Twitter. So I'm questioning if I should actually talk about this or not. I think I will talk about it. So one of the things is that I've been getting a lot of like messages on LinkedIn again for whatever reason. or like my email, and like the recruiters are like super aggressive. It's like, hey, we're wondering if you're interested in joining our startup or whatever the deal is, right? And then I read it and I'm like, well, I don't want to move to California because it looks like you guys are based in California. And then they don't give up. They'll follow up like 2 or 3 times until you respond to them, right? And I'm like not that interested anyways, but it's like, well, you know, if they're going to be really insistent, I can at least humor them or whatever, right? Now I'm sitting here like, well, I'm not even sure if it's worth humoring them because in a tech startup is like the last place I would want to be right now if this is the way the market is going, right? Why would NT? Yeah, I have an indicator on my chart that's that makes a beep when the NYSE opens, but it doesn't always go out on the it doesn't go out on the stream, and I don't know how to change it. For some reason, it's not. The settings aren't showing up right. The settings are suggesting that you should have heard it. Use the DOM with the X3 futures instead of ZN. Well, so if you really want to trade dollar futures, just note that like the data alone to be on the ICE exchange is $100 a month. Okay. Now the small exchange has dollar futures. I don't know if there's enough liquidity there to really get anything done, but that might be something you look at as well. And if you use EdgeClear as your broker, they have a relationship with the small exchange so that you'd be able to trade those. Tell them you will for $250K in cash, salary, rent, allowance, transportation. Well, so this is the thing, is yesterday I saw the guy, you know, I clicked on their link and read about the job, and it was like, you know, they were looking, their offices were in the California areas, all of the common California areas, and so I messaged him, well, I'm not interested in moving outside of Utah right now. And he replied back, well, that's okay because the job is completely remote. And I'm like, oh. So now how do I get rid of him? There you go. Well, if you were going, so if I'm gonna stay here in Utah, it doesn't necessarily have to be 250, but I think to take me away from my current job, it'd have to be a pretty big increase, or it would have to either be a really big increase in salary, or it would have to be related to markets. Allow me to use my Series 65 that I just passed, because I'm like super scared that I'm never actually going to do anything with it. Because like every little, when I start going through all the steps, it's like every little thing of what I would do next is just like more work that it's like, it's even if I try hard, I might not get much from it, right? So like first I have to go in and create a new company. So that's going to be a little bit of money to set everything up and all that, right? And then once I have an investment advising business set up, I'd have to go and seek clients, right? So it's just, it would be easier if I ended up working at a big bank or something like that again, where they would be able to take advantage of both my programming experience and the investment advisor certification for credential or whatever. So I really, what I need though is I really think that I need to speak to some people that are in the investment advising business. Preferably ones that have started their own business, and see what advice they give me, what they would recommend I do. How to change the ES price from ticks to points on my Jigsaw dep. So you need to have the latest version of Jigsaw, and then when you're setting things, there is this tick multiplier, and just set your tick multiplier to 4. So I'm not really seeing that many people on Twitter talk about the non-farms jobs number, and instead everybody's talking about the Chinese balloon. You heard about this? There was some balloon showed up, and they think maybe it's a spy satellite, and the US decided to not shoot it down, and now the Chinese are saying that it was actually like a civilian research thing. So would have been really bad if they had shot it down, wouldn't it? So it sounds to me like somebody built a balloon that wasn't supposed to. The hit or the not? Oh yeah, so there's another component on the non-farms number that I was wondering if it would have an effect. So it was a really hard winter, you know, so that can affect hiring. But it seems like it didn't. Seems like it didn't. So I have this, I like to take a drink of creatine protein before I go to sleep. And they were out of my favorite protein. And so I had to buy the bodybuilding brand of it. And the bodybuilding brand of it has like stevia in it or whatever it is. And it's like, even after the whole night and having eaten a meal and like washing my mouth out with salts and everything to try and get rid of it, I can still kind of taste that weird bitter stevia taste. Hate it. What Twitter accounts? I follow a lot of Twitter accounts. I have a video about trading the news, and in that video I link you to a list of news squawks that I follow. I also have a list of traders that I follow, and then there's just random people. But anybody I can find that is giving serious or linking serious financial market analysis, I try to. Why don't you take it before you work out? So before you work out, you want to take whey protein because your body absorbs the whey protein very, very quickly. Before you go to sleep, one method, I'm not going to say that this is like super supported by scientific evidence or anything like that, but casein protein takes longer for your body to digest. So if you take a casein protein drink just before you go to sleep, you'll get a steady stream of protein all night, right? Now, whether or not that would actually make a difference for you or not, like in your bodybuildingness and so forth, I don't know. But for me, because I have gut issues and everything, it's a lot better for my gut if I eat something before I go to sleep. It's basically to always have a little bit of food in there. So, but I haven't been taking it very often because the one that I got is so nasty. And I just want to finish it so I can get a different one. So there was a little bit of a buy there. I wouldn't say that it was too big in cumulative delta or anything, but it sure did feel like it came up there. I'm thinking about maybe adding some contracts here, but I don't want my average position to get below that 24. Just drink a warm glass of full fat organic cow milk. That would probably help. I don't think it's as good as doing the casing, but yeah, that would probably help. So before my workout, I do take a whey protein drink, and then after my workout, I usually have some Gatorade with creatine. Oh, somebody had a comment and then you just removed it. You didn't take this long question? Take what long? The S&P 500 long? Hell no. So it does look like there's a gap fill going on, right? See, this is what I'm terrified about. Coming all the way back. Coming all the way back. I mean, I think I can see how, based on profit taking and the liquidity and everything, that you're going to get really steep pullbacks. But from a macroeconomic perspective, I just can't take this long. No way. Watch 70. Yeah, that would be... if the S&P 500 hit 70, that would be something else. But we're going to get services at the top of the hour, right? So that could throw another... Yeah, you can see the liquidity pulling back a little bit. So this buying here might have been profit taking again. Although the one that we get right here at 745 is not like the huge one, right? This is the S&P services PMI, and then at the top of the hour we get ISM services PMI. So if those services numbers are good, that could just be another gut punch to the market. The estimate is 46.6. Here we're getting the number. Just a moment. 46.8. So slightly higher than forecast. Yeah, day trading isn't necessarily macroeconomics. I'm struggling for the right words to come in here. I don't see the orders in the next week, if not the next month, really being very much long from here. I think that the Federal Reserve is going to have to get a lot more aggressive, and that 3.5% interest rates make 0 sense. So, my news squawk is reading to me like some of the summary from the report, and they're noting that cost pressures are rising again. So that's not good. And anyways, the gist of what I'm saying here is, okay, from a flow perspective during the day, right? A pullback makes sense, right? But tactically, I would be using that as an opportunity to get short at a better price rather than, oh, we're just going to go up. How do you view metals in this market? Well, copper is still doing okay. Copper has been okay, although it's been flat for a while. The precious metals just got slaughtered. And as long as, we thought that maybe it was safe. Remember yesterday I was being like, well, maybe gold actually does make it back to 2000. Now I'm thinking, no way. They're just going to get pummeled again. Right? So on this short I'm managing here, I can add the 3 back on if they get below my cost basis, so, or above my cost basis rather. So I should note that this rise that we've seen here in the last 10 minutes or so in the treasuries, while part of it is we are seeing a decent pullback in the Japanese yen, but we're also seeing a lot more buying in the 30-year as opposed to the 10-year, and a little bit of buying in the 5-year as well. It's kind of another one of those days where the 10-year is an outlier compared to the other two, but this could be evidence of more flattening coming in, right? My poor bid at 1420. He's waving goodbye. Should you use Python or C++? You should use Python. So if you're doing it in C++, then it can be faster, but it's going to be a lot more work, and you're not going to have a whole lot of material and frameworks and so forth to rely upon. Whereas if you go into Python, they're just they do everything for you, right? I mean, if you're an expert in C++, then you're really confident in C++. Why would you ask me the question? Right? But I'd have to say that to justify doing it in C++ from the start, you really got to be really good at it. You really got to be confident in C++. Enjoy the habit of placing semicolons in Python when using it, dude. So I was doing like coding practice things, and I had done all of my practice in Python, and then I had to do Java. And so when I did Java, I kept forgetting the semicolons. This is so annoying. Python is an interesting one, man, because I really don't like very much about the language. Using tabs for the structure, I really hate. I just hate that the syntax is so different from other things and for no real reason, you know? But there has so many libraries and so much stuff built for it that... The big one is if I was doing if you're like an experienced programmer, I would really strongly recommend you take a look at Rust. If you're a C++ programmer, you will love Rust, man. It is a cool language. It's just straight up a cool language, and I think that in the future it could overtake C++. I really do. It's going to take a long time for that to happen, but I think in the distant future that there will be more programming in Rust than C++. Curious, nope, no rules about gaps up and down. Past price movement is not very effective at predicting what will happen next. So we are getting a strong pullback. Just remember that because of the nature of the move and everything, you got like you're gonna have really damaged liquidity, and so you can get those really aggressive pullbacks a little bit more easily, and that's why you might get like gap fills and everything. But when you try and game out like what are the orders going to be, I don't see the orders being net long by if the cumulative delta, okay, so market buys minus market sells in the ES today, starting from the open, ends up being positive, I'll be really shocked. Very likely that it's going to be net selling. And like I said, I don't know, it seems like some of you guys did try and buy the gap, but if I was trading SPOOs right now, I would be using that pullback to get short again. Is there a speech or anything? There is PMIs at the top of the hour, so we have key data at the top of the hour. Then that's probably responsible for a little bit of the weirdness you're seeing in the market right now. So those market services PMIs come out, you know, especially with prices paid and employment numbers. I'm not seeing action that necessarily screams speech or breaking news or anything like that. You know, we had a really big employment number, so. It does make me consider, though, there could be some passive flows still buying in spite of that news. Try decompressing that down. Wow. Even that, like, just looking at the actual numbers, like how much is actually printing and the pace of it and everything, I think that that's appropriate for this situation. It is higher than normal, but that's because we had an insane set of numbers. Well, I guess I'm taking one there and there and there. Still got 5 minutes to that news, so it kind of looks like the market volume and the randomness ain't gonna let up. Let's just come check Zero Hedger real quick. Nope, nothing new over there. For a piece of news that insane, there's a surprisingly low amount of chatter on social media. I guess it must be because they're all too busy trading. It's probably what's going on. What do you got 69% on? Can you believe ES? So the NASDAQ at one point was down 2% and now they're up 0.5%. And by the way, this was after some pretty bad earnings from the tech companies last night too, by the way. So, oh, this is that where you were getting that from? 69% of you say yes and 31% of you say no. Well, we'll have to see here in an hour if you guys still feel that way. Something I should note in the treasuries, just because I'm seeing a lot of analysis out here that I think is a little bit questionable. In the equity market, you can easily get this kind of backwash here because a lot of liquidity doesn't show up until the open anyways, right? But it's a different situation here in the treasuries. In the treasuries, there's probably, I mean, VWAP is at, oh no, that's my average position, is that? Oh, but it is VWAP too, is it? Where's point of control? 20. Okay, yeah, no, that's right. Okay, so treasuries, there's probably plenty of liquidity above VWAP now, right? So over here, I wouldn't be trying the gap fill trades and everything unless you thought that there's gonna something that's gonna trigger buy orders. Have they finally released the new version of Jigsaw? How many years does it take to trade for a living? Well, if you really want to trade for a living, your best bet is to get hired by a bank right out of college and trade for a bank. As a retail trader, you know, I think that it could be up to 5 years before you even really know what you're doing. And even then, you might not be making enough money to live off of it. Okay, so I'm seeing the liquidity pull for this PMI. It's a little bit of buying there just before it, in fact. Okay, so the number, the estimate is, oh geez, 55 spot 2 versus 50 spot 5. Well, boys, I hope none of you had longs on through all of that. Holy shit. Micros here are actually lagging. They should be buying through that. They should be back at 3.51. Just based on where the 30-year just went. Maybe I hesitate to put an order out there. Maybe there's no way. Is my data broken? There's no way they could be giving me that. Look at this. Holy shit. By the way, 13 was from oh no, we're well past that. It was 18. Okay. So the weekly low is down at 0.6 So also kind of an interesting spot in the profile at 0.9 that might be interesting, but we're quickly approaching levels where it's like we don't have any benchmarks to even compare against now. Okay, somebody did buy it through. I didn't watch the micro there to see how it went, but when it was sitting at 3.495, I was like, I think I should hit it, but I don't think there's something wrong. Like, my data is delayed. I bet you that if I had put an order in there, that nothing would have happened. Wouldn't have gotten filled. There's no way. There's no way. What about prop firms? Well, so the problem with prop firms, Abdul, is that the targets that they put are very, very aggressive, and they kind of force a trader to trade very, very aggressively. And so I think that the prop firms are very much responsible for a lot of the unrealistic expectations that retail traders have. And what we've found from like just surveying people in the communities, and I think Futures Trader 71 did like an actual poll, and I've spoken to a lot of people about this. Most of the funded traders that actually do get funded lose their account within 6 months. So the amount of risk that they're basically being coaxed into taking on is just so crazy that you don't keep it in the end. So consider this. If we were going to take a professional approach to this, okay? So in futures trading, the professional gateway is a commodity trading advisor. Okay, so you can go and get a Series 3, and then you can become a commodities trading advisor, and you can do commodities trading for other people. That would be like the professional, going into doing it professionally, okay? As opposed to retail and trading your own account, right? So if you do it professionally and you do a CTA and you make like 20-30% in a whole year, that you're doing amazing. You catch that and you're doing actually really, really well. Okay, so to come in and expect that you're gonna like double your account every month or something is a little ridiculous, right? The professional ways to join a FIC desk. I was just kind of saying like, the opportunity, I would think that a lot more of you guys would be able to start a CTA as opposed to join a FIC desk. Although you're right, because we're doing treasuries, you'd probably be more interested in doing a FIC desk in particular. It's not a certificate. Commodities are not considered securities, even though you can trade them and they trade just like securities. But they're not really securities in that. With securities, when you offer out a security, you need all of these disclosures and stuff about the business and so forth, right? But a commodity is not investing in somebody else's business, and a commodity is just buying the actual commodity, right? Yeah, I know it's fixed income, currencies, and commodities, but I'm saying if you wanted to do treasuries, you would get a lot more action on a FIC desk than you would trying to do the CTAs yourself. Right. Anyways, so they don't regulate commodities with the same structures as they do securities, and so they created a separate organization for that, and that's why you have the futures. What is it called? It's not SEC. Anyways, there's a different government body that regulates it, and so if you want to be, you have to take a test before they let you sign up for these things. CFTC. That's it. That's what I was looking for. CFTC. So it's all regulated by the CFTC. You take a Series 3 and then you could register your own commodities trading advisor, is my understanding of it. I haven't done the Series 3. That's like the next on my list. I'm going to take a break. I'm going to do some machine learning stuff, and then maybe towards the end of, let's say maybe the summer is when I'll do it, because when I was last summer and I did all of that reading last summer, that was really good. So yeah. But sometimes when Akshay says something, I really feel I really get defensive, don't I? Because he's always totally right? It's just he's usually thinking like on a completely different wavelength from me, right? If you could get on a FIC desk, that's definitely the way to go, right? I'm just suggesting that most people can't. To be honest with you, if I went and applied to try and get on a FIC desk, I don't know if they would hire me or not. Maybe I'm thinking too little of myself. And plus, I don't want to move to New York. That's the biggest barrier for me. But I'm not sure that they would actually hire me, to be honest with you. Because those jobs, they tend to pull those kids out of school, like right out of school. But any of you could go and get the Series 3 and start your own commodities trading advisor business. So that's why I was saying that's kind of the gateway to doing it professionally, right? So I'm just saying, if you were doing a CTA fund and you were managing other people's money and you were able to make 30% per year, you're a rock star, right? Now compare that to what the combines want you to make. When you consider that you can go and manage other people's money, like run your own whole business, and if you make 30% per year, you're doing really, really good. Now you compare that to what the combines want you to do. the metrics for the combines are really quite silly. So I would not look at the, you know, I guess what it really comes down to, I think I underestimate it and don't think about it so much because, you know, man, this trade is, I'm just realizing that I left 3 contracts on and that this trade is now to $2,000, but I guess I'll leave that third one on. What a day. What a day. In the end, what really happens is you don't like your day job, you love trading, and you wish that you could just make your whole income off of trading, right? I mean, that's what people want, right? So really what I should be doing is trying to talk you out of it. No, that one's a sim account, Ismail. I don't want to be misleading to anybody. I would say that all of the fills and what I did was quite accurate to what I would do. So this is my practice for being a CTA is what this is. So if I had a CTA fund and I was able to put on up to 5 contracts, I think I'd be doing a lot more than that if people give me like millions of dollars, you know. I think that, you know, it'd be like $1 million at a time, but I digress. That's what I would have done. Worked out pretty well. So fair enough, but it wasn't real. But I did take this one as live, and I've made almost $80 on this one so far. So what are all your jigsaw? Well, so I have the S&P 500. So starting from the top on the left, S&P 500, 30-year bond, 10-year bond, 5-year bond. And then down on the bottoms, I got 2, 5, 10, and 30 micros. I only need a CTA to manage other people's money, to manage other people's money in trading commodities. If you want to like execute on other people's money for stocks and stuff, you need a Series 7. So I would like to get your opinion on this again, Akshay. I got this Series 65. I was kind of just browsing around on LinkedIn. Oh, okay. What kind of stuff do you find where, you know, for Series 65? Almost every professional job that I've seen, and I saw jobs from JP Morgan, Morgan Stanley, and Goldman Sachs all in Salt Lake City, right? For jobs of this nature that were like, you needed a Series 65, but they wanted you to have both. They wanted you to have the Series 65 and the Series 7, right? So I am sitting here like, well, after I do this Series 3, maybe I do need to get serious and do the Series 7 as well. If I'm ever going to do it for bank, I think that I would need to be at least ready to get the Series 7, right? Like study it. And the problem with the Series 7 is that you have to have a broker-dealer sponsor to do it. Yeah, that's why he asked me the Series 7 that day, right? So if I did a Series 7, it would be in the distant future, right? So the question is still kind of, what should I do right now? Should I, because what it's starting to look like is the path for me. You know, I don't have like a ton of money of my own to manage already, right? Yeah, Series 65 doesn't allow you to handle other people. It only allows you to give people advice. Right. Exactly. I mean, you could give people advice and then pass the stuff off to your broker dealer and have their guys handle it, right? But so I'm wondering, is my only real path right now is start my own commodity trading advisor business and, you know, just charge people a flat fee for a plan. It seems like that's kind of, if I want to do something with it right now, that's kind of what I have to do. I could start a fund, but you know, nobody is going to put money in it. So that one wouldn't make much sense. I find it's frequent that when I get up to $70 that there tends to be like steep pullbacks. So we just got a pretty steep pullback off of all of that. the dollar is what happened is the dollar is pulling back really aggressively. I'm really surprised that the E-mini is holding this. How is that? How is that the case? So I think the plan is start an investment advisor business, charge people a flat fee for a investing plan, work towards a series 3 so that I can maybe do CTA stuff, and then after that, if I'm up for it, start studying for this series 7 and try and get on at a bank and do it for them. I think for me to start studying for this series 7, I would maybe already need to be working at a bank. That's kind of what I'm thinking right now. But I really would like to speak to some people that have done the investment advising business themselves, but I haven't found anybody. I had one person that I was hoping I'd be able to talk to. This guy just sounds amazing, but he's teaching right now, so he's in Hawaii teaching. I'm like, oh, okay. Well, that's not gonna work. I wonder if that means that he's just kind of done his business. He's got the money that he manages and he doesn't have to do a whole lot with it anymore, and so he's kind of semi-retired. Might be the case. If you're making 12% a month, that's suspicious. Yeah. I wouldn't just consider it good. I would consider it suspicious. Like, I'd be highly skeptical of your ability to hit that every month over a long period of time. It's likely that what you're doing is you're taking on a lot of excessive risk, and that you'll just one day you just blow the account. Is kind of what that suggests to me. I tell you what, the Treasury's like really sold on that PMI news. It pulled back so aggressively because of the dollar, but that's so. Number one, you risk 1% per trade, but what is your risk reward? So I'm gonna bet if you're making 12% per month, I'm gonna bet that you're risking 1% per trade, but that you're making 0.25% or 0.5% per trade. One to three, meaning you risk 1 and you make 3. Okay, so then you might not be taking on excessive risk on that side. But still 10% per month is really high. So I would caution against being like, well, I made 10% this month, and so I'm going to do that every month, right? Because like if you're running a CTA fund sort of a thing, for instance, typically the way that goes is you struggle and then you get a move like this and you make a bunch of money, and you know, so It's totally normal to hardly make anything and then have 1 month be 10%, and that's your gains for the year, and you're good, right? But yeah, this doesn't sound like realistic performance to me. You're making CTA funds have a very different set of reporting this. Okay. I'm really excited to, I think I need a break from all of that, so I'm definitely going to try. I purchased 2 books. I've got one that's about high frequency interest rate trading. It's basically it's a bunch of tricks to be able to do interest rate calculations very quickly. So that would be interesting. And then is from a guy on LinkedIn, so I want to buy his book because he's a guy that I really respected on LinkedIn. And then I got the other one on machine learning. We got to go through. And so I'm going to read those first, and then we'll do the series 3. Hopefully by this summer we'll do the series 3. One of them was the machine learning and finance, yes. The other one was just released, and I don't recall the name of it. I'd have to go and look it up. Yeah, so when you're saying 10%, you're saying like it's more like he has 15K in his account. He made some on a few NQ contracts, and that adds up to 1.5K, so 10%. Yeah, that's what I assumed he meant by 10%. Sure, but I'm just saying making that much every month, not very likely. Oh, really? CTAs would report that as 1.5K on 300K notional? Really? Interesting. So you're saying that they would just report that as a 0.5% gain on the month? And that when a CTA is reporting that they made 10% on the year, let's say that they're really talking about making $30,000 on 300,000? Or they're talking about you have a 15K account and you did double it that year? This is fair enough. Well, so let's just say that given margin and everything, that a top performance at a CTA would be like doubling your account in a year. Then, well, we haven't completely retraced. I mean, just remember we were at 23. We were at 23 before the news, so. But it sure are deep pullbacks, right? Like I'm looking out for here and I'm like, oh, I wish it was still at 80. That's like $30. So the thing that I don't understand though is like if somebody invested $100,000 with me, right? They're not going to expect to get $200,000 out of it, right? And I would be trading only a small fraction of it. Right, I would be trading it so that at the end of the year they made 10% on the 100. You know, that at the end of the year they made $10,000 or $30,000. Right, and so I wouldn't need to trade the full size that I could with it, right? I wouldn't go full clip. But I wouldn't be reporting that as like, you know, a 2 million notional or whatever. So that doesn't quite make sense, but I'm sure it'll make sense when I learn that stuff. Well, a little bit of sell-in starting to come in here in the treasuries, and the S&P 500 is higher than before the jobs report. I mean, you can, but you should, yeah, exactly. Oh man. Okay. So I said that I would be quite shocked if they got above that high. So I'm quite shocked. I am quite shocked. Services sector stupidity. ISM soars the most since the COVID rebound, and PMI signals recession. When I look at the equity market, and I see it buying up here, that flow has to be something unrelated to. I mean, we've had buying up through here, right? So there could just be buying in money that has to be put to work. And they're ignoring the non-farms payroll, but I just can't imagine. I mean, if the S&P 500 just continues going from here and we don't really even get a big pullback or anything, you know, which is to say we don't revisit below 4,000 in the next month, that's the only way I can see that happening is that there's something about this news that really questions questions the conclusions that I've made about it, right? So if you have 40,000 in your account, you made 7,300. Yeah, that doesn't sound that one doesn't sound too crazy, I guess. I mean, if you think about it, just look at what I've done here in the treasury. So I'm actually still quite conservative with my sim account, and I'm putting on 5 contracts, right? So I would only need $2,500 in margin to do that, right? In day trade margin, at least. I guess if we were going to go the full clip, it's like 2,000. So it's like, yeah, a 10 to 20K account, I could do that, right? And I could make up to $2,000 in a single day. Yeah. And I really took profits quite aggressively too, so. You made a scoreboard? What is that? You mean like people put their performance up and you compare them? Was it any different? I guess maybe. Maybe you're right. Because you're saying it's 5. Zezzy's making 5 to 6K and he's got 40K, right? So that's like 25. That's about like 12.5% in a month. I don't know. So here's the other thing, okay, is that it is conceivable, if you're really good at this, right, to make that much regularly with an account that size, right? The problem is it scales real quickly, right? So that's not going to be sustainable when you're need to start trading a larger size, right? But even then, consistently getting 12% would be really, yeah, you'd have to be not scaling. But But the bigger thing that I'm getting at is like, how long have you been doing that for, right? If you've been doing that for 5 years, then we should be talking about starting a fund, right? But I'm betting that it's more like you've been doing it for a year, and that's how you've done the past 6 months or something. You know, it's like I could come in here and say, look, I made $2,000 and now I'm a rock star, right? But the reality is that I just caught a trade on a day on something that probably never happens again, you know? So, you know, the performance was very much a function of the market, not me. I'm not going to be able to pull that off every year. Oh, Trojan scopes. You know what? I was thinking about that yesterday. I was like, oh yeah, that guy that he gave me that name. I forget what the name was, and then I didn't look into it. I totally forgot about it, and I had like a super ADHD moment. And I was like, he's probably not going to come back. He probably thinks I'm stupid and was like intentionally ignoring him or something. Man, it's so if you can back that up with statements, then why aren't you starting a CTA, man? Let's do it. Let's do it. I've never seen that before. I've literally have never seen it. And for me to believe it, I'd have to see the broker statements for sure. No offense, man. So how to create in Jigsaw cumulative delta chart with a very large small lots? I do not understand what you're saying, Jarich. Or I don't know how you say your name. Daniel from Chart Champions, yes. Oh, he has tax records. That's good. So I'll tell you something. Here's one thing that I have found. We don't talk about very often, and I don't think about very often, but it does happen. I have seen some instances from traders that have made like really outsized gains quite consistently over a very long period of time. And in most of the cases that I see that sort of thing happening, I don't think that your average person could duplicate the results, right? So like to me, if you could come in here and trade the treasuries and make that much every month, I'd be super impressed, right? I have a hard time just consistently bringing a profit out every month. You know, I can, and I think that overall over the year, not factoring in the data fees, because I'm trading such a small account and everything, the data fees are a much larger percentage of my portfolio than it would be if I scaled up and all of that sort of a thing. But I was mostly profitable over the year, okay? But it wasn't every month, right? But some of these guys, they're able to pull these like really big gains out. But when how are they doing it? You know, and they're often doing crazy things that I don't think everybody would be able to do. Like for instance, Mark Minervini is one that I hear mentioned a lot, right? Well, if you actually go and look at like what he's trading, a lot of the time it's like penny stocks that the gains are coming from, right? So any time that you're seeing that kind of outsized performance, you really do have to kind of sit there and take a pause, because like if it was so easy to make that kind of performance, then everybody would be trying to do it and it wouldn't make money anymore, right? So you have to consider what is it about it that they're able to do it that other people aren't able to take advantage of, right? Yeah, if you can get the inside track on penny stocks, yeah, you can make money from doing it. You can. But like when we look at futures traders in particular, you just have to realize like 95% of the people that try it fail at doing it. The amount of people that are like consistently making money from it, and to the point that it could like replace your income, we're literally talking about a handful of retail traders. Like there might be a dozen of these guys in the treasuries, you know? It's not common compared to the number of people that try to do it. The market breaks and runs its high or low, usually at least once a week. That trade alone, and you beat all fun. Well, yeah, if you assuming that you always win with that trade. Okay, so why do people fail, and what sets you up for success? So, like I was saying yesterday, there's like this, it's a competitive thing, right? So when you look at like the top 10%, to get into the top 10%, you have to be here, right? And this is top 10% of like everybody that's involved in the market, which means that you're competing against people that are like trading for Goldman Sachs and have access to all of their resources, right? So the reality is that in order for you to get to that level, you really have to know your stuff, you have to be really experienced, and you have to be trading your best. You know, and for most people, it's going to be like you can only just kind of barely get to that level, and you're going to be like, this is me, right? I'm kind of, you know, depending on how well I understand that current market, I can do really well or not very well. I guess I'm watching the baby here while my wife takes the kids to school. So that's really why ultimately it comes down to that day trading, and futures in particular is a zero-sum game. So you are competing against everybody else. So even if it was a much more even playing field, let's just say, okay, it would still be the case that like 60% of traders would fail. Like just statistically, with when you consider the spread and everything else, probably 60% of traders would fail, right? Let him hit the mic while he's sleeping, so. Okay, so just note that 60% of people would fail anyways, right? Then on top of that, you put that like a really large swath of people just don't know what they're doing, right? Okay, but even if you go into the people that have traded for a long time and seem to know what they're doing, like for several years and stuff, the failure rate is still north of 50%, right? So I think part of that can be attributed to just how difficult it is to consistently perform at the level that you need to be profitable in futures trading. But I think the other part of it is, and how you really get to, like, in some surveys it's like 90%, is that retail traders have a lot of ideas about how markets work that are just straight up wrong as well, right? And so that's the part that I'm trying to fight against, is I'm trying to help you have a sound understanding of market based on empirical information, right? That, I think, at least puts you in a position where you at least stand a chance, right? And then what is the thing that determines whether you can have success beyond what I can give you? It's going to be you continue to research and learn as much as you can about the markets and how well you understand those markets and how able you are to take advantage of the opportunities that come. But yeah, I think that if you took out all of the people who quit, it would probably be closer to 70% fail. And like the thing is that even when you go into those people that make money, it's still only like 5% of them that are really making enough to like live off of it. But again, all of this stuff that we were saying earlier about like the performance is kind of all theoretical. You would really have to show me the broker statements and the tax statements. If you can show me the broker and tax statements of a retail trader that was performing at that level 10% a month over a 5-year time period, I'm very skeptical. Basically, I'm saying I'm in a really nice way. I don't believe you. Okay, do you think I should put all my bags in one basket and learn treasuries, or branch out and learn a bit about everything? Well, okay, so here's how I would approach this, is that how well you understand that particular market is a considerable part of the edge, right? So the advantage of the treasury market is that the things that you're trading off of are like really big picture sort of things that kind of affect everybody. And so there is a lot of information out there to read about it and to try and develop your edge on. And if you understand the treasuries, it really, that experience is applicable to everything else that goes on. Okay. So I always would encourage people to start with the treasuries and trade the treasuries for a while. Right. But, once you feel like you've got a hang of things, you know, in the treasuries, it totally makes sense to branch out if you have a special advantage that might give you an advantage in another market, right? For instance, I had a friend that he worked for the oil company for years. Like, he was retired and he made a ton of effing money in oils, and he always knew what oil was going to do. He didn't trade it because it scared him like it does me. You know, it's just too big size for him. But he was also a very technical trader. But if he had traded the informational inefficiency that he had with oil, you know, that would have been really advantageous for him, right? So, you know, it kind of comes down to like, do you have like some background and experience that might give you an advantage in a particular market, right? So you notice that one of the ones that I'm kind of interested in branching out to is copper. Like, that the copper market is always interesting to me. It's because I know that there's a lot of stuff going on in the copper market, and I don't know how to get that information, but I know it's possible to get that information. And I live in an area with like the largest copper mine in the world. So I know that eventually I'm going to run into somebody that does know that stuff. That's why I'm interested in the copper. Yeah, so if you're a computer person, having a good understanding of tech companies could help. So that one's actually really interesting because everybody thinks that they have an advantage in tech, and there's a lot of people that if they want to trade tech companies. So note, number one, that interest rates and your ability to grow is a huge factor, especially in big tech companies. So if I was just a programmer, you know, or like I am a programmer, right? I don't typically invest, at least not anymore, in the Googles and the Apples and so forth. I'm usually going into smaller companies who have a technology that I feel strongly is a good product and is eventually going to, you know, get bigger, right? But that should always kind of be the approach, especially when it comes to which asset should I trade, is given my background, where am I going to be able to find the biggest advantage, right? And if you don't have anything, then I say that probably the easiest place, at least in terms of futures trading, to build that kind of a knowledge base and advantage is in the treasury market. There's a lot more resources for you to learn from in the treasury market than there are for most other things. Oh, why are you asking me about central bank digital currencies? That's so left field. I think that so first of all, I think that the monetary system that we have right now works pretty well. Okay. I think that there would be a real advantage of a decentralized ledger that allows everybody to essentially be their own bank and not have to use banks anymore. Yeah. Okay. So for a central bank digital currency, you fix all of the problems with crypto by making it an official US currency. Yeah, there would be an advantage to that. I don't think that advantage is so much that it would be necessary for a country to be competitive in the future or anything like that, but it would be kind of convenient. But here's kind of the problem, is that the number of things that you could do it would be put into the protocol, but the number of the amount of abuse that you could do with the central bank digital currency is like really grotesque, right? They could really change how money works in a way that is very disadvantageous to the average man. Absolutely, right? And so I kind of feel like it's kind of like a little bit of reward, like a convenient thing for like huge risk to our rights and freedoms. So I'm not going to say that they shouldn't do it, but I'm very concerned that they'll do it in a way that shouldn't be done, right? That's what I think about CBDCs. There's a BVS where it's a link to their government company house register. Oh, Trojan Scopes, if you posted a link, I'm not going to see it. YouTube filters it out and it doesn't tell you that it's filtering them out. So you'd have to put like spaces around the periods or remove the periods for me to be able to like copy it. Depends on how your theoretical learner wants to trade. Speculatively, I would say YM is a better instrument. Well, okay, so the issue, well, YM is not as bad. I mean, it's not NASDAQ, right? The issue that I continue to have with equity indexes in terms of like being able to develop your edge in equity indexes is that there's just so much noise in that market compared to everything else. So if I was going to try and trade YM, I would probably be more trying to swing them. Yeah. Because in a situation like this, you might be able to pull out a really good trade out of nowhere. But on the day-to-day sort of a thing, there's a lot of noise. And most of what I see from most retail traders is they want to trade equity indexes, and their results are actually, when you really look at them statistically, are really just noise and taking on risk. But what the approach that I'm saying is that there is more informational inefficiency out there than there is statistical technical inefficiency. Okay. So where would be the place where it's the easiest to generate an informational advantage? I think it's in the treasury market. There are situations where you can have that informational advantage in the equity markets, but they're bigger picture opportunities. Yeah, treasuries could have a move you wouldn't even know if you're off sides. That's true. So like the difficulty in what we're doing is there could be all of this information out there and you only have this teeny tiny little bit, right? And especially I would say it's even worse in the equities market, but in the treasury market, there is a lot of information that we don't have that puts us at a disadvantage, right? And the way that we compensate for that is just by being very selective and only trade in situations where we really feel strongly that we have an advantage, right? So I feel like in this situation that we had a pretty good advantage, and now at this point, the only advantage that I have is having a good position, right? Because I'm not sure why the dollar has done what it's done. The dollar is completely retraced and the S&P 500 is still buying. They're completely ignoring the news. They're just brushing it off as like seasonal adjustments, I guess. It sure does seem like a lot of people seem to think that they were gonna do it, and I didn't hear any kind of fundamental justification for it. So the treasuries overall are doing what they should have, though. So the real question is, why are equities buying as strongly as they are? Oh yeah, I'm familiar with Axia. I remember when they started their channel. Yeah, I think they have good content. I love Brannigan. Brannigan is my is my favorite. He's not always right. Sometimes he's very, very, very wrong, and sometimes his analysis is a little short-sighted. But he also has really, really good, insightful things. I don't know, like, if it's worth it to spend all of the money on their stuff, but, like, you know, for the free stuff that they put on their channel, it's good stuff, especially if you're new. You know, I don't watch their videos too often, though. I don't find their videos very interesting for the most part. Okay, so we're back to 16, which is about the highest since that news. It looks like, you know, there was this range. You got this liquidity hole here all the way here through 13. And now they're kind of like seeing if maybe they can bust through the upside and try and retrace the losses from the PMIs. No, like again, I'm telling you guys, like, it makes me so nervous because all of the big moves like this that I can remember, except for that non-farms payroll day. That non-farms payroll day, I was like, I got $50 and I'm like, that's enough, and I took it off. And then I was like, oh, I totally should have kept it on. But there were so many others where I thought it was a really big deal, and I was like, oh, let's swing it, and it came all the way back. So I'm really nervous about it. But I think I should stick to my guns. I don't know, you guys still feel, 70% of you say swing long rates? I don't know. Kind of depends on what you think about ES here, doesn't it? So let me point something out here about the S&P 500. Let's just come over to here. So look at the cumulative delta. Starting from the open, 3,400. The lowest that they got was 28,000. Yeah, that's 3 zeros. Okay, so like the net change in cumulative delta here on the S&P 500 is not very high. If you can't trade ES, trade corn. If you can't trade T-notes, trade wheat. Yeah, you could try and do it. Like if I was a farmer, I would trade corn and wheat. Yeah. If I knew about farming. I'm telling you, find something in your background and look at where you can have an advantage. Right? I think that technology is the interesting one. Maybe if you're a computer science student, maybe the place to have the advantage is not in technology companies, it's in algorithmic trading. Trade eggs. Well, I do have chickens. My chickens haven't been laying, so I haven't been able to take advantage of that. I'm like, here's our chance. The egg prices are up. We should be making tons of money off of the eggs. Probably by the time that our chickens are laying eggs, the problem will be gone. Okay, so we are seeing a little bit of a bull run in the dollar again. The other instruments aren't necessarily responding to it too much. The treasury is still kind of sticking up there. Just buy end of month before every close and then sell minutes to. That actually probably would work, wouldn't it? It would seem kind of silly, and I do think that it would be a little bit fat-tailed, right? But yeah, that probably would work. Certainly would have worked that close on January. That was nuts, right? I do wonder here, like, okay, I'm not seeing like tons of buying in the futures, right? But stocks are up today. Who's buying that? Right? Like they're ignoring the news. And the weird thing is I'm coming here, I'm like, well, what is going on with that? Nobody's saying anything. Mohammed A. El Arian, he just said something about it. Today's ongoing recovery in stocks after a difficult open illustrates again where the current pain trade is. Per my earlier conversation with Pharaoh TV, the roaring start to the year forced significant short covering and continues to pull in at higher prices the underinvested. That is true. Can we really chalk it all up to short covering though? I don't know, man. It has outperformed the S&P since its really? Since its inception? You know, there was you remember the whole thing about that, like the majority of the S&P 500's gains happened in the overnight session? That has kind of changed since things went south in China, hasn't it? So I think that it does strongly suggest that a lot of the gains that have happened in equities have been because of Chinese investors, right? Coming into putting their money into markets. That comes and goes in cycles. Makes sense. But the thing that I find so interesting about it is like how quickly people forget about it, right? Which is to say, like, if there is an edge like that, you know, kind of becomes well known, and because it's so strong, you know, it'll disappear. But if you keep watching it, you might be able to take advantage of it when it comes back, right? Because everybody else forgets about it. Well, there's my cue to start shutting things down, guys. So, it looks like you guys say I should try and keep it. So let's try and keep it. That's going to make me super nervous over the weekend. But okay, we'll do it. As currency already looking at dollar, it's clear why we've switched bullish from a long-term perspective. We have been and only squeezed in November. So we'll just take a quick overview of the markets here. So Treasury's down and still down and extending off of the PMI numbers. A steep pullback right now. Could it be possible after European close and everything that we end up closing at the lows of the day below 05.5? Totally possible. Totally possible, but no way to really say. Meanwhile, in the S&P 500, not as dramatic of a fallback, and I really thought that maybe they would try and sell it even more in the once they got going, but it hasn't happened yet. So this could shift as well throughout the day. It could be a really interesting day, and we're at the beginning of the month and everything. So yeah, I mean, you still got what, 3 whole weeks till the 17th until options expiration and everything. So it's going to be a ride. Oil actually is still up today, so not quite sure what to make of that one. Perhaps even though the US economy might be looking really bad and interest rates are looking really bad, perhaps the money is coming in from China. That I think is my best theory right now. Gold and silver just absolutely savaged with the rest of the interest rate complex. Copper not going super great. So if our trade, if the reason really was money from China, I would, and we were expecting more growth from China, I would expect to see copper up. So maybe some evidence that that's happening, but not incredibly clear. And then we come back over into, Bitcoin took the hit and recovered it really easily. The dollar, though, I mean, look at the dollar. Of course, the dollar has come back from its highs, but we're still well over 102. And I probably need to come in here to a longer term chart on the dollar. Which one is it? I think I do it on the 6J. Yeah, so you can see here, we've been in a long downtrend in the dollar. So if the dollar is going to start rising back up here again, 105 would be kind of like the next swing high in that spot. So that kind of gives you an idea of maybe some of the benchmarks you might want to be watching in the dollar. I don't use benchmarks as predictive, but I do use benchmarks to kind of figure how big of a move is this actually. So, time for me to go. I will. Oh, that's weird. Why is that showing up? It must be a new thing with Teams. We've been bullish since June. I did buy some stuff mid-year 2021. But those positions are still mostly flat. I do wonder, like here again, with the S&P 500 pushing up so aggressively, it really makes me wonder if like one should sell some stocks here. But I'm not going to do that with that portfolio. If I had an active portfolio, I think probably you pair some positions. All right. Well, anyways, it's time for me to go. I will see you guys on Monday. We'll see how this does over the weekend. In the meantime, stay excellent, team.